Warm welcome to you all. My name is Aloni Jain from Valorem Advisors. We represent the investor relations for Iron Exchange India Limited. On behalf of the company and Valorem Advisors, I would like to thank you all for participating in the company's earnings conference call for Q4 FY18. We apologize for the delay. Before we begin, I would like to mention a short cautionary statement. Some of the statements made in today's con call may be forward-looking in nature. Such forward-looking statements are subject to risk and uncertainties, which could cause actual results to differ from those anticipated. Such statements are based on management's belief as well as assumptions made by and information currently available to the management. Audiences are cautioned not to place undue reliance on this forward-looking statement. The purpose of today's earnings conference call is purely to educate and bring awareness about the company's fundamental business and financial quarter under review. Before we begin the call, I would like to give everyone a brief introduction about the company so that everybody is on the same page. After that, I will introduce to the management and they will be giving their opening statements. Iron Exchange India Limited is a pioneer in end-to-end water and wastewater solution provider to industries, communities and consumer product side. Thus, the company is present across the length and breadth of capabilities around constructing water treatment plant, water treatment products, solutions, its operation and maintenance, and manufacturing and supplying of the required specialty chemicals and resins. The company operates in three segments. One, engineering, which constitutes roughly around 58% of the revenues. Second is the chemicals, which represents roughly around 32% of the revenues. And the third is the consumer product division. This represents roughly around 10% of the revenues on an FY18 consolidated basis. Iron Exchange was originally formed as a subsidiary of Permuted UK in the year 1964 and later in the year 1985 became a wholly owned Indian company. Currently celebrating its 53rd year of operations, the company represents India as a global MNC player and operates out of almost all the major countries. The company offers one-stop water and non-water treatment solutions to segments like infrastructure, industry, institutions, municipal, homes and communities, urban and rural. The company undertakes designing, engineering and supply of water, wastewater treatment, sewage treatment, seawater desalination and recycling plants on turnkey, BO2 and EPC basis. The company manufactures world-class iron exchange resins for water and non-water specialty chemicals, membranes, water treatment chemicals and specialty process chemicals. It also provides water and environment management solutions to hotels, homes, spas, hospitals and other establishments by providing safe drinking water and a clean environment. The company has more than 50 patents to their credit and have been probably instrumental in more than 1 lakh installations globally. Now, I would like to introduce you to the management participating in today's earnings conference call and give it over to them for their opening remarks. We have with us Mr. Ankur Patni, who is the Executive Director, Mr. N.M. Ranadev, Executive Vice President of Finance, Mr. Vasim Nayak, who is the Senior Vice President of Finance, and Mr. Nulin Puranik, who is the Company Secretary of the company. I will hand over the call to Mr. Ranadev for his opening remarks. Over to you, sir.
Thank you, Ms. Aloni. Good afternoon, everybody. I am N.M. Ranadev, Executive Vice President of Finance. It is a pleasure to welcome you to this Q4 FY18 earnings call. I will take you to the quarterly performance of our company on a standalone basis. The total income for the quarter is approximately INR 3,355 million. EBITDA reported is approximately INR 427 million. EBITDA margin is approximately 12.73%, which has grown by 73 basis points year on year. Net profit after tax reported is approximately INR 237 million. PAT margin is approximately 7.06%, a growth of 31 basis points year on year basis. I will now take you through the segmental performance of the standalone entity for the quarter. In the engineering division, turnover is approximately INR 2,102 million against approximately INR 2,460 million for the corresponding period last year. EBIT is INR 180 million as against last year's INR of 174 million, growth of 3.4%. In the chemical segment, the revenue recorded was approximately INR 952 million as against INR 939 million year-on-year basis, growth of roughly 1.4% over the same period last year. Reported EBIT for the Q4 FY18 is INR 192 million as compared to INR 220 million in Q4 FY17. In the consumer division, the turnover this quarter reported is INR 323 million as compared to INR 258 million in Q4 FY17, growth of 25%. Losses for the quarter have significantly come down to INR 5 million. To highlight few financials of the company on consolidated basis, the company reported INR 10,760 million against INR 10,594 million in FY17, growth of close to 2%. On EBITDA level, the company reported growth of 20% at INR 981 million with margins of 9.12%. PAT reported was INR 398 million, a growth of 38% with margins of 3.70%. I will now briefly take you to what we feel has been happening in the various segments of the company. And to begin with, we will talk about the engineering segment. Recovery in this segment was witnessed post-November 17 and continued in this quarter, resulting in increase in sales and profitability. There has been encouraging order visibility in the capital goods industry. Revenue against Sri Lanka order has been recognized based on the work progress. Company has ventured into solid waste to energy business in India with the aim of providing cost-efficient technology as relevant to India and geographies it serves as part of its larger vision of environment management. Apart from this, the company is eyeing water infrastructure projects coming through various government initiatives and schemes. In the chemical segment, there has been improved offtake due to seasonality in certain products that has resulted in higher sales growth over the previous quarters. Margins have remained under pressure due to rising commodity prices. We have received the US FDA approval for our new capex in Ankleshwar plant and have started trial runs. We are expecting this to hugely impact our revenues and margins in the coming year. In the consumer segment, higher turnover has resulted in improved overhead recovery and lower losses. The company plans to increase its reach further into the rural landscape of the country, where most of the population still has limited access to safe drinking water. In the rural market, the company continued to expand its presence by introducing existing technology in new markets. It works closely with the various government and non-government organizations across the country to take care of the drinking water needs of the rural communities.
Now that the opening statements are done, we can open the con call for the question and answers. Although I would request all the participants to restrict their questions to the quarter performance and the future prospects of the company, rather than the broad-based understanding of different aspects about the company. Rayo, we can now move on to the Q&A session.
Sure, thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. We have the first question from the line of Dimple Kotak from SKS Capital. Please go ahead.
Yeah, hello, sir. Good afternoon. Sir, I have a couple of questions. One is that what would be your outlook on each of the segments? Have we bagged any orders in the engineering segment, and how much have we booked this year from Sri Lankan? And with chemical segment, I agree, maybe because of the rise in crude prices, the margins are suppressed. But going ahead, what is your view in that? When will we see a recovery both in the top line and in the margins? And with respect to the Ankleshwar plant, what is the potential turnover and our tentative clients? And so finally, on your EPS, the calculation, if we calculate with the number, the number of shares given in your standalone and in your consolidated press release is different. And EPS calculations are totally different. So can you just help me understand that?
Coming to your first question regarding the system invoicing, we have booked during the year 123 crores turnover in the Sri Lanka order.
Okay.
Full year.
And what would be the run rate going ahead?
We expect to have close to 35 to 40% of the turnover in the coming year. Currently, we have finished close to 17% of the total order. And this year, we expect it to be 35 to 40%.
Okay, got it. And so what has been the order book for engineering segment? Have we bagged any orders?
Engineering segment total order book as of now is 550 crores.
That means we have not got any orders because that has been on the execution from 600 down to 550?
No, order received during the fourth quarter close to 150 crores.
Okay.
During the 17-18, we have bagged close to something like a 450 to 470 crores orders.
So your order book, I believe, was 550 crores in the starting of the year. No, 600 crores in the beginning of the year. 550
crores.
And it closes, and then you execute it and it closes at 550 crores.
We have.
So what is the order book in the engineering segment as on date?
Excluding Sri Lanka, 550 crores.
Okay, sir. And so in terms of your chemical segment, what is the outlook over there? When can we see that growth trajectory coming in and the margins will be suppressed because of the oil prices? So by when do we expect things to be better for us?
Yes, we do not expect this current trend of lower margins and suppressed growth to continue for longer. I think over the period of the next quarter, that is Q1 and Q2 of the current year, the chemical segment should get normalized. In terms of the pharma unit which you plant resin pharma unit, we have been discussing about the gradual pickup of clients for that particular unit because of the long approval processes. We are seeing some degree of success, and we expect during the current year we should be able to get a much higher level of revenue from that particular unit. We are also envisaging that we might need to incur further capex on that particular unit to cater to upcoming demand.
So what would be the kind of capex you would require this year for them?
Come again?
Hello. So what would be the capex required, further capex required on the segment? And what is the potential turnover which you are targeting this year from this segment?
Capex entire year is around 50 crores, and that will be mainly in the chemical segment.
So for FY19, what would be the requirement, capex requirement?
I told you, 18-19 total capex will be close to 50 crores for the company, and majority of it will be in the chemical segment.
And so what would be the difference in the margins with current existing chemicals, what you are getting, and from this new plant, since it would be going in the niche segments?
It should be an incremental of around 2 to 3% or so.
Okay, sir.
And sir, lastly, if you can just help me with the EPS calculation. Just the last one, please.
Yes. EPS calculation, see, because when we are consolidating the accounts, the cross holdings held by the subsidiary companies shares are eliminated.
Okay.
That is the reason for the different calculations working in the EPS and consolidated and standalone.
So what is the number of shares we'll take in? 1.46 is the share which we have. If I divide the number, it is coming to 27, whereas the press release is reported 34.
See, 36 lakh shares
Yeah.
And subsidiary companies are holding 4,37,000 shares.
Thank you. The next question is from Rahul Pawar from India Capital. Please go ahead.
Sir, can you please put a new press release with this clarification what the lady was telling about the EPS first of all? And secondly, sir, we are listening to your call for a few quarters. Why the story is not converting into the numbers, and where we can see what kind of attractions you are getting from the government side? So what is the overall take of the management on the economy and on your own industry, sir?
Hello. I think we've been seeing over the period of last 1 year or so a period of a little bit of uncertainty, which was brought about by the tax legislations which came in. The consequent hurdles which got posed for certain segments of the industry, they took a little bit of time for those to settle in, and we've been reporting over the last quarter or so that we are seeing a little bit of an uptick happening for our engineering side of business as well as for our chemical side of business. So we do feel that in the coming quarters, the economy in general will perform better than what it has over the last few quarters. And we, as a company and as well as the water treatment and wastewater treatment industry as a whole, should benefit from the improving economic scenario. So in a gist, you should see a better performance happening in this year.
Okay, and what kind of government order flow or the government tendering is opening up? What kind of news you are getting from the state governments or central governments, sir?
We expect increased level of order flow from the government, both at the central and state level. And we will be participating in these opportunities selectively. Exact numbers is very difficult to predict at this point of time. We know that the next year would be the election year, and a lot of activities would also be defined by the timelines associated with the elections. So very difficult to accurately predict the quantums, but I certainly expect a lot more activity this year than what we have witnessed in the last couple of years.
Okay, I'll come in the question queue. Many thanks, sir.
Thank you. Next question is from Varun Gia from Qtr4 Capital Advisors. Please go ahead.
Hello. So my first question is that in the past 1 year, how many the amount of orders you have bidded for, and like how much percentage of that do you expect to receive in the next 1 year or so? Hello.
See, our current order bidding pipeline is close to 4,500 crores.
Okay. So that is in the past 1 year you have bidded for this much?
Not
in the engineering segment.
See, this is the current order backlog.
Okay.
Inquiry book.
And how much do you expect to receive?
See, last year, overall, we received close to 460 crores. Current year, we hope to improve that, on that number.
And from this, how much are the government contracts and the remaining private? Hello.
Government, in the order book, government would be close to 30%.
30%. So, do you see growth in coming in, like, are you focusing more on the government orders or the private side?
Both.
Okay. Thanks a lot.
Thank you. Next question is from Yash Agarwal from Crest Capital. Please go ahead.
Hello. Yeah, so a clarification on the Sri Lankan order. So you said that by the end of this year, 35 to 40%. So you will execute incremental 35-40% or 35-40% of the total order will be executed by FY19 and so.
Incremental 35 to 40%.
So 40% of 1,300 crores. That's about almost 450 to 500 crores you expect to execute.
Yes.
Okay, that's great, sir. Also, I had a question on subsidiaries, sir. So if I, do a consol minus standalone, calculation, so the profitability is increased pretty sharply.
Yes.
And it's primarily led by, reduced cost of goods sold. Because if you see the turnover has reduced from 84 odd crores to 60 crores. So what has led to this and how sustainable is this? I wanted to check.
See, during the current year, the engineering subsidiaries, Indian engineering subsidiaries have shown improvement. Although there is not much improvement in the turnover, but the costs have come down, and which has resulted in the reduction in the losses in the subsidiaries. And we are hopeful this performance will be sustainable in the coming years also.
And so, a question on this, the new Ankleshwar plant. So, how much have you totally invested here, sir, in Ankleshwar?
Ankleshwar plant is an old plant. It's not a new plant.
Oh, it's not a new plant, is it? So, but this FY18 you invested anything here because you got the US FDA approval, etc. You were saying, and it'll help you improve revenue and margins, etc. You were saying. So,
during the year, we have invested 15 crores in the plant.
Got it. And so, you mentioned that this year you expect a higher order inflow from 460 crores. So, how much higher would that be? About 700-800 crores? Is that a right number to go with? Order inflow target for this whole year?
It would be difficult to give you an exact guidance on it, but yes, it should be significantly higher than that last year number of 450 crores.
Okay, sir. Thank you so much.
Thank you.
Thank you. Next question is from Kunal Bhatia from Dalal & Broacha. Please go ahead.
Yes, sir. Thanks for the opportunity. So just wanted to know in terms of the Sri Lanka order, I just missed out on the total executed till date would be how much?
199 crores, including last year's.
Okay. And sir, also a clarification on the net diluted equity, what number is the one which we should work with?
There is no ESOP, so basic and diluted is the same.
No. So I'm asking after removing the cross holdings and everything. So what is the net equity or the number of shares we should work with? Because there is a confusion on that front.
Okay, we will come back to you later on that this thing. Exact number will give it to you.
Okay, fine, sir. And in terms of the Ankleshwar unit, sir, if you could just give a brief on the 15 crores invested in the current year, what kind of asset turns it can throw, and also the next year, we have mentioned about a 50 crores expansion. So how much of that, you mentioned that some bit of it would be going for the Ankleshwar plant again. So how much of that 50 crores would be going towards Ankleshwar, and even in the total kind, what kind of turnovers are we expecting? Asset turn are we expecting there?
We should be looking at minimum 1 to 1.5 times of asset turnover happening this year. Whereas in coming years, it should improve on to more than 2 to 2.5 times.
Okay. So, 1.5x on 15 crores?
That's right, 15 crores.
Okay. And so next year, how much are we investing in the Ankleshwar plant?
Ranveer, can you throw some light on that?
Close to 20 crores.
20 crores FY19. Okay. Okay, sir. Thank you so much. So, and just if we could give the equity figure also.
Yeah, we'll come back to you.
Okay, okay, sir.
Thank you. Next question is from Pranav Tendulkar from Rare Enterprises.
Hi, thanks a lot for the opportunity. Sir, I just have some questions about each of the verticals. So engineering verticals, you said that the segment order book has actually improved. So what are the underlying factors that are driving the uptick in the orders? Hello?
We've been seeing an improved performance by the economy as a whole, which has led to an improved number of projects which are going through, and Ion Exchange typically gains from such an improvement in capital expenditure in the economy as a whole. That's been one of the drivers. Two is a lot of the projects which had got stuck or were facing hurdles because of the changed regulatory environment, especially on the taxation front. They started to move, and that also gave an improved flow of both orders and the orders which we already had but we were not being able to execute. We saw an improved degree of execution of those orders. So these are the couple of reasons which have directly impacted the engineering side. Further, we are also seeing improvements happening on the international front. So all three together are the reasons for the uptick.
So any vertical wise, like engineering, what are the main industries that drive this order book segment? Like, can you just mention top 2-3? Is it sugar or is it chemical? What is it exactly?
The largest consumers for the water treatment industry on the capital expenditure side are the core sector industries like power or steel or a large petrochemical facility. These are the ones which tend to give the largest sizes of orders. And when you see an improvement happening, especially on capital expenditure in these sectors, you would almost always see a direct correlation between the order inflow for the water treatment industry.
Right. Sir, also I missed the number that you mentioned, that 199 crore of the Sri Lankan order is been executed till now, but what is the amount that has been executed in this year?
123 crores.
123. And next year you are saying that it's almost 390 crores that you will execute. Out of 1300 crores, 30%. Is that right?
35 to 40%. So it could be ranging from 400
to
475 crores.
Okay. Sir, in consumer, what is your plan to make this, vertical big? Like, it's there for some time, but sadly it's not scaling up the way we visualized it.
We are looking at a strategy which is less intensive on upfront marketing expenditure, which tends to be a drain on the company, at least during the initial couple of years of such investment. And this strategy seems to be paying off. In the current year, we have seen improvements happening across various sub-verticals of the consumer division. We feel that as we continue on this strategy of looking at not the heavily marketing-oriented segments, But at other segments of the market where the competition is less intense and it is far more technology driven, and where the solutions we feel that we have a good proposition of value. These are the segments which we are currently focusing on, and you should be able to see the rewards of it in the next couple of years.
So, typical consumer here is a local governing body, like civic bodies?
When we are talking about consumer segment, most of the time we are talking about individuals, or we are talking about community of individuals. It could be an institution or a building complex or a commercial complex or a rural community. So it's generally not to do with the government side.
Okay. Thanks a lot, sir. I will come back in the queue if I have any other questions.
Hello.
Hello.
We'd like to give the information required by Kunal Bhatia of Dalal & Broacha. The number of shares to be considered for standalone is 1,20,03,745, and for the consolidated basis, it's 1,15,65,871.
Thank you. We take the next question from Harsh Shah from Dimensional Securities. Please go ahead.
Good afternoon, sir. So I wanted to know, in your chemicals division, can you give us the details of capacity utilization for both your resin plant as well as the normal water treatment resin? Your pharma resin and water treatment resins.
Resin plant, the capacity utilization is close to 90%, and the chemical plant, the capacity utilization is 65%.
So 90% is for the pharma resins?
Resin plant as a whole.
As a whole. And 65% for water treatment chemicals?
Chemicals.
Okay. And the another question pertaining to chemical division is, on quarterly basis, if I see, the margins fluctuations are too high in the chemicals division. So what is the reason behind that, sir?
Seasonality is one of the factors, and in the first two quarters, because of product mix, margins were varying.
So this is a continuing factor? So it will always be the same in first two quarters, the product mix will always be unfavorable?
More or less, yes.
Okay, yeah. That's it. Thank you.
Thank you. Before we take the next question, we'd like to remind participants that you may press star and 1 to join the question queue. Next question is from Santosh Vai from India Nivesh. Please go ahead.
Good afternoon, sir. Sir, I have 3 questions. First question pertaining to the engineering segment. If we are guiding for a 35 to 40% execution to be done by year to end, and if it is a 3-year contract, what would be the initiatives or what are doing that the remaining 60% would get, or 50% would get executed in the 3rd year? That's the first question. Second question, what were the initiatives being taken by the company that led to around 15 days decline in the receivables, both at the standalone level and at the consolidation level? This is noteworthy because despite flattish sales, we have seen a decline in the consolidated receivables. And same reason, I would just want to understand what led to margin improvement at the subsidiaries level. So I know question has been asked, but what initiatives or what were the drivers that led to such improvement?
Coming to your first question, the Sri Lankan order execution, we have already executed 17% till now, and another 35 to 40% will be executed in the second year, and the balance 40-45% will be executed in the third year.
Yes, it is 40-45%. Okay, so it is okay. My mistakes.
Is okay then?
Yes, sir. Yes, sir. Got it.
Okay.
My interpretation was wrong. Yes.
On subsidiaries, we have already explained. We have improved the cost of sales. We have improved, and that will be sustained in the coming years also. And large engineering jobs which were there in some of the subsidiaries companies, they have been executed and finished, and that has driven us the reduction in the losses in those subsidiaries.
Okay. And sir, reasons for fall in the receivables, both at the standalone and the consolidated, sir. In terms of days, I'm asking, sir.
We'll come back to you on this question. 1 minute.
So one last question, if I may add, just pertaining to the subsidiaries part, please. If I may. Sir, given that now these large legacy contracts have been completed, now what kind of ordering we see for these subsidiaries, you know? So do we see a degrowth kind of scenario in these subsidiaries, or what's the pipeline looking like? Just add some color, please.
No, we are not looking degrowth kind of scenario in the subsidiaries, but we are definitely very cautious in accepting the orders in the subsidiaries, particularly foreign subsidiaries.
So is there any order book sitting at the subsidiaries level, sir? I know we don't have practice, but any color on that front? Revenue visibility.
Order book which you have mentioned is sitting in the parent company.
Yes, sir. So I'm just trying to get a color of what's the order book sitting for the subsidiaries. If I have to model into my the revenues for the subsidiaries, how should I model it?
Exact number will not be saying, but it could be in the 75 crores to 100 crores.
And most of the orders we have won or we are likely to win related to this, or it is not more to do with the number. I'm just trying to get a color and feel of, you know, which segments or which geographies or what is that we are doing that gives the comfort that we are going to see that kind of revenue booking.
No, the revenue definitely we expect the revenue to improve in the subsidiary companies also in the years to come.
Okay, sir. And sir, I hope you would give me some insight on that receivables space, sir.
Yes,
on the receivables space.
Yeah, I will give it to you.
Okay, sir, I'll wait.
Thank you. The next question is from Yash Agarwal from Crest Capital. Please go ahead.
Hello. Yes, sir, I just want to ask, when's the final date for the Sri Lankan order? By when does it have to get completely executed?
The May 2020.
Okay. Thank you.
Hello, regarding this number of days, the improvement is not much. It's only 3 to 4 days improvement is there on standalone basis. Over. Next.
Thank you. Next question is from Varun Gia from Qtr4 Capital Advisors. Please go ahead.
Hello. So there are, in the subsidiaries, there are still losses of around 9 crores. So wanted to know what does these losses pertain to, and when do you see that coming down?
Currently now the losses continue to be in the two major companies. One is the Ion Exchange Enviroforms and Global Composite Limited. We hope to turn around definitely in the Global Composite Limited. Enviroforms, since the matter is before sat, we expect it to be over during the current year, and then we will be in a position to again dispose of the surplus assets available in this company, and hopefully, if not in the next year, at least a year after that, we expect it to be break even.
But what are these losses like pertaining to?
Losses actually pertain to the finances which they have taken. This is interest on the loans which they have taken. There are no operational losses as such.
Okay. And one more question. Do you see any international orders being received in the coming year or so?
Our order bidding book includes those, and we are hopeful of receiving those orders.
So what is the value of these bids? Hello?
Sorry, your question was not very audible. Can you come back?
Yeah, I wanted to know the value of those international project bids.
It's close to 50% of the total value in the pipeline. That should be roughly in the range of around 2,000 crores to around 2,000 crores odd. And we are obviously excluding some of the very large-sized bids in this because they will skew the picture completely.
Okay. Thanks a lot.
Thank you. Before we take the next question, we'd like to remind participants once again that you may press star and 1 to join the question queue. Next, we have a follow-up question from the line of Dimple Kotak from SKS Capital. Please go ahead.
Yeah, hi sir, thanks for the follow-up. Sir, since you said that you will see again a revival in chemical segment, but chemical segment in the past have been doing well, growing in high double digits. So that level of growth, when will it come, and won't the margins be still under pressure because of high crude?
The impact of crude prices, yes, we will continue to see slight pressure on the margins as long as the upward volatility in the crude prices continue. We are trying to take all possible steps to ensure that it doesn't impact our margin levels and we are able to
So if you can just highlight few steps you are taking, because is it a pass-through for us?
That's what I'm saying, that yes, we are trying to ensure that the hit of the cost is not taken by us, but we are able to pass through some of these costs. But it's a function of time. It takes a little bit of time for these cost impacts to go through to the end customers. So as long as the volatility in the crude prices continue, the margins do tend to come under a little bit of a stress. We don't expect that to continue for too long, and they should be in a position to get normalized in the space of next 2 to 3 months.
Sure, sir. Thank you so much.
Thank you. Next question is from Devang Mehta from Bay Capital.
Hi. Just wanted to understand what part of the revenues are coming from in the chemical segment out of roughly 350 crores. What part is resin and what part is water treatment chemicals?
50-50.
50-50. And this would, are we directly competing with, in the water treatment chemicals with BASF? So are our products similar or competing products to BASF?
BASF plays across a very large range of chemistries, and it's not very often in competition with us. But yes, there would be some some specific chemicals or in very specific segments where it could come in competition with us. Generally not.
Okay. And does our input in the water treatment chemical include ATBS?
Come again?
Does our raw material in the water treatment chemical include monomer, ATBS monomer?
ATBH would be there, but yeah, that's not a very significant raw material.
Okay. Okay. Fine. Thanks a lot.
Thank you. The next question is from Sabyasachi M from India Nivesh Securities. Please go ahead.
Yeah, hi. Thanks for the opportunity. If I look at the engineering segment margins that have improved, significantly from last year's same quarter, is it fair to assume that, on account of Sri Lankan order executions, our margin has improved? Hello.
Come again? The question was not audible.
Okay. So, the engineering segment margins improved a lot, if we compare with the last year's same quarter. Is it fair to assume that it has improved on account of, Sri Lankan order execution this quarter?
To some extent, but not entirely because of that.
So the margin improvement can be attributed to high margin domestic orders as well?
Yes.
Okay. And may I know from which are which sectors or which are these orders in the domestic front?
Medium segments.
Any specific industry?
We can't throw a lot of color on this, Sabyasachi, I'm sorry. But yes, it's quite broad in terms of the industries from which we are getting slightly better margin orders. And one part of it is to do with the margins at which we are getting orders, and the second part is to do with slightly better operating efficiencies also.
Okay, understood. Second question would be on the any update on the sewage treatment plant. The tenders were floated somewhere in February, March by the Municipal Corporation of Greater Mumbai. I assume that we have participated, if not all, but in some projects of that. Any update on that?
These are very operational questions, Sabyasachi. I can't answer this on the call.
And on so we have also started to venture into solid waste to energy, I believe. So any update if you can, any color if you can throw.
Yes, we have. It's not something which we have delved into it just now. We have had the technology to work in this space for some time now. However, there is a recent development and innovation which we have worked upon very recently, and this is giving us very good results. We're working with few industries as well as municipalities with this new technology, and we do expect that the rewards of those should be visible in the coming year.
Any orders you expect in this year?
Yes, we do expect some orders in this year's services.
Okay, thanks a lot.
Thank you.
Thank you. Before we take the next question, a reminder once again to our participants that you may press star and 1 to join the question queue. Next question is from Kunal Bhatia from Dalal & Broacha. Please go ahead.
Yes, sir. Thanks. Most of my questions have been answered. Just in regards to the also the number of shares which you gave, 1.2 crores on the standalone. So how do we reconcile that with the given figure in the press release or even in the annual report? Because the annual report also mentions about 1.45 crore shares.
So we explained to you now. Total shares are 1 crore 46 lakh 66,659. On standalone basis, to be considered is 1 crore 20 lakh 3,745. Okay, because of shares held by the trust, please refer to note number 5 of the standalone results. And for the consolidation, you have to consider 1 crore 15 lakh 65,871 shares because of the cross holdings by the subsidiary companies.
Right. So understood that, but in your press release, it just mentioned held by the trust. So the remaining shares are just held by the trust. So is it what we have to take, or meaning if you could just reconcile the number?
Trust remaining shares are held by the remaining are held by the other people, no? Public and others.
No, I was just saying that apart from the 1.2, the remaining shares, could you reconcile the numbers with the press release?
Kunal, if you look at the note number 5, as Randeep just mentioned in the press release, that gives the number of shares held by the trust. And that if you consider the total number of shares which are there and you deduct from that those number of shares, that gives you the reconciliation with respect to the standalone figures. But if you look at the consolidated numbers, there are some other subsidiaries which have cross holdings. Those also get knocked off. And that's the reason why there's a difference between the standalone figure and the consolidated.
Okay, so fine. I'll take it offline. No problem. Thank you.
Thank you very much. That was the last question in queue. I would now like to hand the conference over to Mr. N.M. Ranade from Ion Exchange for closing comments.
Thank you all for participating in this earnings con call. I hope we have been able to answer your questions satisfactorily. If you have any further questions or would like to know more about the company, we would be happy to be of assistance. We are very thankful to all our investors who stood by us and have also in confidence in the company's growth plan and focus. And with this, I wish everyone a great evening. Thank you.